I went to Hobbiton and bought a Lord of the Rings playing cards set in New Zealand. I thought that was cool and I wanted to put it in the video. But anyway, if you are struggling to pick the right market structure shift or the right fair value gap, kind of, but today we're going to focus on what is the right market structure shift, because that is definitely something that I struggled with when I was starting off with the ICT 2022 model. So in this video, I'm going to break down the lessons I've learned in the past about 2 years trading ICT. I'm going to break down the lessons that I've learned to pick the market structure shifts that are valid, and maybe some tricks and tips to know which ones aren't maybe going to be valid, and hopefully help you improve your trading and help you improve picking the right market structure shifts. So tip number one is to understand what the daily chart is reaching for. Obviously, it's kind of goes without saying that if you know what the daily chart is reaching for, if you have a daily bias, then taking trades that align with that daily bias are going to help you filter out those market structure shifts that are just noise. They're just price moving around, chopping, whatever you want to call it. Knowing what that daily chart is reaching for based off of your daily analysis, looking at the daily liquidity levels, thinking about seasonal tendencies, thinking about what fair value gaps are being respected, what imbalances it is reaching for. All of these things can help you frame a daily bias depending on what day of the week it is, depending on what month it is, depending on what news events are coming out that week. All of these things you want to be thinking about when you're looking at that daily chart to determine a daily bias, to determine which direction you are going to want to look for market structure shifts in. An important thing for daily bias is having a daily bias isn't an everyday thing. A lot of the times you go into the market and you won't have a daily bias because it's just there's not enough information. You're not really feeling as in tune with the market as you sometimes might. And that is just something that happens. It's not, obviously we're not perfect, and one, you're not always gonna have a daily bias. Two, you're gonna have the daily bias that is wrong sometimes, and if you're wrong, guess what? You're gonna lose a trade, and there's nothing you can do about it. If you came to watch this video and you thought I was going to teach you how to pick the right market structure shift every single time without fail, then click off now, because this isn't that video, and that video doesn't exist, just to save you a little bit of time. But to give you a bit of an example as to what daily bias looks like in price action, obviously this week we've had a very bearish week. Now, did I think this was going to go down as far as it went? No, not at all. I don't think anyone could predict that unless you were ICT. He seems to be flexing online that he has been predicting this, and to be fair, he kind of has. So, I mean, if you hate ICT, guess what? He predicted this. So he predicted this, and you can actually go and check that he called it before it happened, which, I mean, I'm not an ICT cultist. I'm not a guy who takes every ICT by everything that he says, but I've got to admit it was pretty cool to see him call that out live. Not even live, he called it before it happened. Like, it's impressive. But anyway, after Monday's price action, we dug back up into this sell side imbalance, buy side inefficiency, this bearish fair value gap. Now, is it more likely, given the current state of the market, hint, hint, is it more likely that we are going to displace up all the way above these highs and go for the relative equal highs all the way up here? Or are we more likely to take out this swing low that we formed and dig further deeper into these two weekly sell side objectives that I have marked out? Obviously, in hindsight, that is exactly what happened, and it went much further beyond that. But what's important is that we want to frame a bearish daily bias. As we're digging up into this bearish fair value gap, we want to be looking at market structure shifts to the downside after sweeping buy side liquidity, which is the next point I'm going to get onto. So the second trick or tip that I wanted to go over was that when you're looking at a market structure shift, don't just be taking any displacement above a swing high, any displacement below a swing low. If you want to really filter the best market structure shifts, they are going to be the ones that dig into liquidity. That is a main component of a market structure shift. It doesn't just randomly shift, it will dig into some sort of significant liquidity. And if you're thinking, well, there's liquidity everywhere, Brad, that's not very specific. Well, how about this? You want to be looking for market structure shifts right after a specific time liquidity. What do I mean by that? A session liquidity. So an Asian session purge, a London session purge, a New York PM session purge, look for the highs and lows, the extremes of those sessions as your liquidity levels, and look for those to be the catalyst for your market structure shifts. Obviously, an example we have here, this sell side down here, is the Asian session low, which if you want to identify these on a specific time frame, I find the 50-minute chart is best just because it's the one that ICT tells you to use in the 2022 mentorship. It gives you a nice little overview of the entire daily range, but realistically, it doesn't matter what time frame you're marking it up on as long as you're marking up between the specific times. So as we can see in here at 9:30, you might be mistaken in thinking that this move here was a market structure shift because it displaced above a load of swing highs, but you are mistaken because it didn't dig into any significant sell side liquidity. It did dig into sell side liquidity, and I'm not saying that this is absolutely not a market structure shift. I'm just saying that it's not a valid one for me, and I would filter this one out, and I have found that by doing that, it has benefited my trading and my ability to call valid market structure shifts. Now, if we switch our focus down to the market structure shift right before the Asian liquidity was purged, we can see that we had this swing high, and then the Asian sell side was purged, and then we got the displacement. That is a market structure shift, or at least that is the market structure shifts that I'm going to tell you to focus on in this video if you are someone that struggles with finding the correct market structure shifts. Now, the third tip or trick is going to be to look for a market structure shift on the different time frames. If you're just zoomed into the 1 minute chart and you're not even paying attention to the 5, the 4, the 3, and the 2, then you might be struggling to find the right market structure shift because you want to find a market structure shift that agrees with all the time frames. Now, what do I mean by that? For me, when I'm looking for market structure shifts, I'm looking at the 5, the 4, the 3, the 2, and the 1 minute charts, and I'm looking for the first swing high for a long or swing low for a short in those different time frames. And as soon as I see one, I'm kind of locked into that time frame. I'm not opposed to taking a smaller time frame market structure shift, but I would say 7 times out of 10, and if I was going to recommend you to do it, I absolutely would, that doing this kind of switching and just as soon as you see the market structure shift and the fair value gap on that time frame, don't go any lower, stick on that time frame and watch it play out. Does it come back to that fair value gap? Is it a valid market structure shift? Those are the things you want to be looking at, and those are the things that I will do personally when I'm looking for market structure shifts. The final tip or trick, and this is for me what an A+ market structure shift looks like. This doesn't have to be what every market structure shift looks like. As you'll gain more experience, you'll kind of get that intuitiveness with the market, and you'll be able to kind of call market structure shifts a bit more frequently and not have to apply all of these rules. You'll build that experience with the market, and you'll be a bit more in touch with it, and you'll understand what I mean when you experience that. But this final rule is to look for market structure shifts at the swing high or swing low right before that liquidity or fair value gap, in this scenario it's going to be liquidity, is ran into. So what do I mean by that is you have this sell side liquidity here, and I'm looking at this swing high here. Let me just outline it for you. This swing high here, because that swing high is the closest swing high right before the sell side liquidity was purged. There is a swing high here, but my focus is on the swing high that formed right before the liquidity was purged. Any other swing high that forms after that liquidity was purged is not invalid, but is definitely not preferred. I want to see ideally this one broken, and that will give me much more conviction, much more confidence in that market structure shift. So those were my 4 tips for anyone struggling to find market structure shifts. Then I hope you learned something and enjoyed the video. I would appreciate a like and subscribe, of course, to help me get this channel to where I want it to be. But other than that, I have nothing else for you boys in this video. If you have any other tips or tricks that you might think are useful, then feel free to comment them down below. And if I agree with you, I will leave a like on the comment so other people know that that is a good tip to be looking out for. But other than that, boys, I will wish you good luck and good trading. Catch you later.